The recent Israel-Iran military standoff led to a slew of worries among the global community. One particular issue that had everyone worried was the rise in the prices of crude oil. Namaste. Do you know that at one point in time, a few days ago, crude oil prices had increased by 20% month on month? However, after Israel and Iran agreed to a ceasefire, the prices dropped more than 12% within just 2 sessions. Crude oil prices, which had touched $78 a barrel, dropped below $68 following the ceasefire. Some experts feared that crude oil prices might touch $100 a barrel if the Israel-Iran standoff intensified. The hike in crude oil prices has the global community and economic experts worried. Why? Because a rise in crude oil prices leads to many repercussions. Let's see the reasons.
To get more insights, we spoke with Venkatachalam Shunmugam, partner MCQube, Mumbai, India.
Welcome to Businessline's Trending Commodity Pick Show, Mr. Shunmugam. Can you kindly tell us how high crude oil prices impact agri-commodities?
There are various ways in which crude impacts our economy. Oftentimes I ask various people, including the students that I teach economics, our commodity markets actually, as to how many of you believe that crude prices does have an impact on fertilizer prices. Nobody knew that crude is an important part of fertilizer prices, because the naphtha that we use for production of nitrogenous fertilizers is partially derived from crude and natural gas as well, actually. And that's about 70 to 80% of the nitrogenous fertilizer costs, and nitrogenous fertilizers are pretty critical for many of the crops, actually. Secondly, most of the times, in most of the emerging markets, actually, urea is imported, or most of the developing countries, the urea is imported, actually. And that is also imported from the countries which produce oil. And sometimes when the disruption is coming from the production centers, actually, some fertilizer will be kept away because, there is a geopolitical tension, and there may be a ban on purchasing those fertilizers, such as what happened in the case of Russia some time back. The fertilizer prices go up, actually. So typically, when crude oil prices rises 10 to 20%, the fertilizer prices increases by 5 to 10%. Half of that percentage, actually. So that's the kind of situation that is coming in from the higher input costs, which is because of the higher fertilizer prices, because the crude is trading higher. Actually, we were fortunate enough and blessed with the cooling down of tensions, and the Brent prices coming down to $66, actually. So that's a good sign, actually. The other way that we can look at in terms of how it would impact the crop prices that we pay as consumers, actually. So oftentimes we don't understand that we have a huge logistic costs, and also we also have huge cost of production when it comes to increase in diesel, mainly diesel prices, and at sometimes petrol prices, actually, because diesel forms up to 30 to 35% of the farm operation costs. Actually, that means if there is a 10% jump in crude oil prices, the operation costs or the cost of cultivation will jump up by 3 to 4%. So 10% jump in crude oil prices, the cost of commodities would jump up by 3 to 4%. And so transportation is another hindrance in terms of crude prices getting reflected in higher commodity prices, actually, right? And freight costs, typically account for 30 to 40% of the mandi to market logistics chain, and this is across the world, and more suited to India as well, actually. So having said that, if there is a $10 increase in the crude, it can typically add about 1 rupee to 1.5 rupees per kilogram of vegetable, everything else remaining, constant. it can add, a rupee or 1.5 rupee per kilogram of vegetable or grain to transport them into the from farm gate to the consumer's plate, actually. So that's another way that it can impact, actually. And the other way that it can impact is so we also, have over a period in time, because of the renewable energy costs, which we have subscribed to because of the climate change and everything. I mean, we consume agricultural commodities for our energy purposes, actually. One of that is ethanol. And ethanol is, either produced from corn or produced from, in our case, the molasses, actually. So any increase in, crude oil prices would make, addition of ethanol, more economical to do that. And so that would lead to, more corn getting converted to more molasses getting converted into being ethanol, unless and otherwise there is a mandate and they have to follow the mandate. And so that's another way that it could impact, actually. And the second way the biofuel can impact is, crude palm oil, or palm oil for that matter, and soybean oil are also used as biofuel in blending with diesel, actually. So, a sustained higher prices, makes it more economical for, countries like, such as in the EU, to actually blend soybean oil and palm oil into the diesel and start using it, actually. So to that extent, apart from food demand of these edible oils, there is an energy demand of this edible oil comes up, and that leads to higher prices of, maybe sugar prices, maybe corn prices, maybe edible oil prices, actually. We did a study on some time back, I think we about a decade or a decade and a half back, actually, when government banned, trading of wheat, actually. So we did a study on, the impact of crude prices and its impact on soybean oil, corn, and wheat, actually. And to any common man, if I can actually, show them the pathway, nobody will realize that it actually turned out to be the wheat, which is very highly impacted by the crude oil prices, rather than either the corn prices or the soybean oil or the palm oil prices, actually. That's basically because, wheat consumes most amount of energy. One, because of its fertilizer consumption costs, and then two, because wheat is largely produced in the tropical region and has to be transported, subtropical region, and has to be transported into the tropical region, actually. So that is, adding heavily to the transportation costs of wheat. And wheat is also a higher energy consumer in terms of the cultural operations or the fertilizer that is being used, actually. So what turned out to be is that wheat was very highly influenced by crude oil prices, and crude oil prices remained very high at that particular point in time, and that justified the wheat prices. So whenever there is a rising crude oil prices, that crude oil prices leads to a little bit of a higher headline inflation, and that inflation, could lead to higher agriculture commodity prices, actually. So typically, whenever there is a, sustained price spike in the crude oil, actually. Say, for example, in this period when it actually broke the $75, actually, the institutional agri fund positions in the derivative markets, actually, especially in CV markets, rose by 20 to 30%, actually. So that means, they wanted to actually cover the inflation through taking positions in agricultural commodities, because they are going to constitute higher level of price increase. And going to the roots to address the inflationary costs is something these funds, as a practice that they have it. So a higher speculative demand also would add to the additional inflation pressure. So in short, the biofuel linkage, the transportation costs, and the fertilizer costs, plus the speculative and inflationary pressures, will always have its toll on the agriculture commodities.
What's the impact on inflation and economy due to rise in crude oil prices?
It actually leads to, because any increase in food costs actually turns out to be a multiplier on the one inflationary expectation, and also turns out to be something where the cost of production of other goods and services increases actually. So that leads to them rising prices actually. So that's why we call that as overall headline inflation, though food is an core inflation component.
Isn't allocation of agri-commodities for biofuels leading to food security issues?
Yes, indeed. Actually, it does result in scarcity of food and things like that. Actually, especially when it comes to edible oil. But what happens is that it's actually the economics which actually drives the demand for conversion of edible oil into biofuel. Actually, I would say the developing countries, from having access to cheaper edible oil, is to keep the crude oil prices lower, so that we don't make poor more poorer by keeping this non-food demand. So maybe this was around 2008, 9 or 10 when the crude prices rose to 110, 120 and 130. I mean, there was a serious diversion of palm and soybean oil into biodiesel, and that led to a higher demand for palm and soybean oil, and spike in the prices actually. So whenever there is a spike in the prices of crude oil above 70 or 75, you can typically see that the palm and soybean prices rising higher and higher.
Fortunately, the pros has come to our rescue. Before we end the episode, we wish to thank you all for helping us to complete 1 year of trending commodity picks. Keep smiling and be happy. This is Subramani Ra Mancomu signing off until we meet in our next episode. Good luck.